Wall Street closes mixed on Friday, but indices end the week with gains following encouraging inflation data and more certainty over President Trump's policies. Asian markets trade mixed. The Japanese Nikkei trades flat as fourth quarter GDP growth beats expectation. The GIFT Nifty is suggesting a lower start for the Indian markets. Crude prices dip on Friday with the Brent crude trading below $75 a barrel. Gold also sees profit taking with prices falling under $2,900 an ounce. Sensex and Nifty declined for the eighth day in a row on Friday, recording the longest losing streak in 2 years. Stocks also pose their largest weekly loss in 2 months. 26 lakh crore rupees in investor wealth has been wiped out in the last 5 sessions. At least 18 people lost their lives and over dozens were left injured after a stampede at New Delhi railway station on Saturday night. The incident occurred as crowds surged while awaiting to board trains to the Kumbh Mela. The capital also wakes up to a strong tremor as a 4.4 magnitude earthquake hits the region at around 5:30 this morning. Hello, good morning. Thank you so much for tuning into CNBC TV 18. I'm Vinny Motiwala and you're watching Power Breakfast. Thank you so much for joining in with us this morning. A quick look at what the Asian markets are doing this morning. A bit of a mixed opening is what we've seen coming in. While Hang Seng is managing to hold on to strong gains, Taiwan Index is managing to hold on to gains of more than 1%. Shanghai also holding to the positive side. We've seen ASX 200 that's seeing a decline of around 0.8% this morning. Nikkei is flip-flopping between the red and the green. They did have the GDP number that came in, but yes, as of now, almost flattish is what Nikkei is trading at. Not much of a gain, but not much of a loss. So mixed opening is what we are seeing coming in from the Asian markets. But how is that implying, and what is the Nifty implied open indicated for the Indian markets? Muted start is what we're seeing. A bit of a decline is what we're watching out for. 26 points decline is what Nifty implied open is indicating right now. So we could expect a muted to a red start coming in for the Indian markets. But last week also we had seen a sharp fall coming in. So let's watch out for where it's going to be headed from here on. But let's move on and talk about what the handover that came in from the US market. Now, Wall Street ended mixed on Friday with S&P 500 ending the year, ending near the flat line, while Dow Jones shed 165 points. Tech-heavy Nasdaq that closed 81 points higher as well. The three major indices, when you look at it, ended the week with a green color, and the large chunk of these advances were coming in on Thursday after investors gained some clarity on Trump's tariff plans. CNBC's Pipa Stevens is joining in with us to get us a wrap on what happened on Wall Street.
U.S. markets were mixed on Friday as investors shrugged off sagging retail sales for January. The Dow fell 165 points. The S&P was down by about half a point, but the tech-heavy Nasdaq rose 81 points. Retail sales slumped in January much more than economists expected. The latest report from the Commerce Department found sales fell just under 1% for the month, and it could indicate U.S. economic growth in the first quarter could be weakening. Economists said the data, which includes spending at businesses ranging from gas stations to restaurants and department stores, could have slowed because of the bad weather that hit the country. But it still fell much more than expected for the post-holiday season. And a major milestone for Meta. The stock posted its 20th straight day of gains on Friday, surging about 20% during that run. And the company, which owns Facebook, Instagram, and WhatsApp, added more than $250 billion in market cap. That's more than the value of Disney. It's also the longest daily winning streak of any stock currently in the S&P since at least 2000. That's what's happening here in the U.S. Back to you in Mumbai.
On that note, here is some opinion from the market experts on the outlook for Wall Street indices and the impact of macro data.
I think what we've seen from earnings overall is that there's some really positive long-term prospects here. And just because you have a little bit of competition from other companies, other markets, and those competitive moats are dwindling somewhat, doesn't mean these companies cannot be fundamentally huge deliverers for shareholders. But I do also think we are all breathing a bit of a sigh of relief here after the last 2 years where the Mag 7 were 63% and 55% of S&P 500 returns, that this year when they're only contributing 3%, the rest of the market is up. We are still near all-time highs, and genuinely it has been a rotation rather than a sell-off.
And, you know, one of the things that we see in our S&P 500 earnings modeling is that there's a direct positive correlation between CPIs and S&P revenues, right? So if the companies get the pricing power, that does usually, to some extent, at least, of course, there are offsets, but have that positive impact. We are hearing in the tariff discussion loud and clear from companies that they will use any tariffs that come through as an opportunity to pass on through price. Now, ostensibly, that's just a recap, the outlay, but you do have to wonder to what extent are companies going to try to add a little bit on as well. That's something that's just going to have to be monitored.
Okay, that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you what are the important stocks to watch out for, as well as FNOQs as well. Now let's go across to Vamakshi first, who's here to tell us what's happening in the market front. What are the important cues that we are watching out for today? Good morning, Vamakshi.
Well, good morning, Vinny. It was a painful week for the market last week, and the bears took control. We saw the market fall for the 8th straight day, which is, for the first time in 2 years. For the week, Nifty was down 2.7%, the biggest weekly loss we've seen in the past 2 months. Nearly 44 of 50 Nifty stocks post losses this week. The top drags this time around were Eicher Motors, Hero, BEL, Adani Enterprises, as well as M&M. Now, what caused this fall? It was largely the uncertainties around the potential tariff war, along with the relentless FII selling. The broader markets too saw a very sharp correction, with the Nifty mid-cap slipping by almost 7.4% and the Nifty small-cap was down somewhere around 9%. All sectoral indices too ended the week lower. The top drag this time around was Nifty Realty, that the index was down nearly 9.4% for the week. Nifty Auto and Nifty Pharma were some other indices that closed nearly 6% lower. On the flip side, when we look at the US markets, they had a good run. All three indices closed in the green, with S&P 500 posting a gain of 1.5% for the week. Dow Jones was up nearly 0.6% and Nasdaq was up 2.6%. As far as the cues for today are concerned, we will be keeping an eye out on India's trade balance data. The US markets will, of course, be closed, so we will not have many cues coming in from there. But apart from that, in the rest of the week, we will be keeping an eye out on the FOMC meeting minutes, the RBI MPC meeting minutes, as well as S&P Global Manufacturing and Services PMI data for India. As far as Nifty is concerned, the key level to watch out for is 22,800. This has been a strong support zone, so we'll have to wait and watch if the index can sustain above this or not. And lastly, let's also pull up the GIFT Nifty for you. As of now, when we look at the GIFT Nifty, it is suggesting a mildly negative start for the Indian markets.
Okay, thanks so much for that, Vamakshi. But let's look at which are the important stocks to watch out for in today's trading session. A whole host of earnings. So firstly, GSK Pharma, good set of numbers, around a 35% uptick in terms of profit, margin seeing an expansion of around 300 basis points. Good traction was seen across all the segments for the company, as well as cost efficiencies was something that was supporting the margins. Bajaj Consumers, on the other hand, we've seen the profits see a decline of around 30%, revenues are down by 6.3%, and margins, operational performance has also been a bit weakish, so that could come under pressure today. Ethos, on the other hand, we've seen profits seeing a growth of around 16%, revenues at around seeing a growth of around 31%, coming in at 369 crores. Margins have remained almost flattish, just a 40 basis point decline. Keep an eye out on that. Volume seemed to be good, so it'll be interesting to watch out for Ethos and trade. Ease My Trip, that's also in focus. Seems like a weak set of numbers reported by the company. Profits are down by 26%, revenue seeing a decline of almost 7%, and operationally also we're seeing a weak performance where EBITDA margins are down to 31.7% versus 37.9%, so sharp contraction in terms of margins. Glenmark Pharma, a good set of numbers coming in. The company has swinged into a profit this time versus a loss last year. Revenues have seen a growth of 1%. India formulation and India business overall has seen a very, very strong growth on a year-on-year basis, so that'll be interesting to watch out for in terms of more commentary coming in on that front. Overall, they managed to see a good growth. Utkarsh Small Finance Bank, also the company has reported a loss this time versus a profit. Asset quality has deteriorated, so keep an eye out on that. Borosil renewables, net losses have expanded and widened further, and EBITDA losses at 1.1 crore versus an EBITDA last year of 20.6 crore. BHEL in focus on the back of their order wins, so keep an eye out on all these stocks. But let's move on and talk about what's going to be happening in the world of F&O. What are the important cues that we're keeping an eye out on that? Mangalam is here to tell us more about this. Good morning.
Good morning. So it was a lot of weakness that we saw on Friday. And why just Friday? If you look at all the frontline indices, all of last week as well, we did see a decline, nearly 3% on the Nifty, 2% on the Nifty Bank, and the broader markets were where the pain was felt even more, nearly 10% for the Nifty small cap index after a big drubbing that we've seen already. So that small cap index was down 9.5% all of last week, with the mid caps down 7.5% itself. Key reasons for decline. One was the relentless FII selling that we've seen, and as a result of which there was the weakening rupee as well. Fear and uncertainty around tariffs was another factor why there was some money taken off the table. And the most important of them all, it was insipid third quarter earnings season, where the Nifty posted an earnings growth of just around 4%. And the key events like the budget, the RBI Monetary Policy Committee, all those events were out of the way as well. Speaking about the FII selling in cash, that picked up almost 4,700 crores on an average basis all of last week. And with that, the FIIs have sold nearly 30,000 crores in the month of February so far, after having sold around 87,000 crores or $10 billion in the month of January. And they have been selling for the last 3 or 4 straight months. Not just in cash market, they continued to sell in F&O as well. All of last week, they added around 32,000 short contracts, compares with just around 5,000 long contracts. And the FII net contracts, which at the start of the week were a negative 1.6, have moved all the way up to a negative 1.9 itself, with only 16% of FII positioning on the long side, with 84% on the short side. Call writing is getting fairly easy, so we saw a lot of call writing at 23,000, 23,100 and 23,300. At the lower level though, 22,800 put is equally active as well. At some point there could be a rebound, but to what extent does that rebound lie is something that we'll watch out for. The put call ratio moved closer towards that 0.7 mark at 0.77, and we have the 20-day moving average for both the Nifty and the Nifty Bank, extremely crucial to track.
Okay, thank you so much for that, Mangalam. But on that note, we're going to step into a very short break. On the other side, we get you updates and views on US President Donald Trump's tariff threats. So don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now moving on, and some good news for whiskey lovers. India has slashed tariffs on bourbon whiskey imported from the United States following the criticism over tariffs from the United States President Donald Trump. The government issued a tariff adjustment notification on the 13th of February with the new duty structures, which sees imports taxed at a tariff of 100% compared to the earlier tariff of 150%. The revised tariff applies exclusively to bourbon whiskies. Other alcoholic products continue to be taxed at the previous rate of 150%. Now, let's move on. And during PM Modi's US visit, both President Donald Trump as well as our Prime Minister agreed to trade talks to lower tensions. Now, reacting to the India and United States trade ties, former RBI Governor Raghuram Rajan says lowering tariffs would be beneficial for India. Listen in.
I think if you look at the entire relationship, India does run a pretty large trade surplus with respect to the United States. There is scope for India to buy more. For example, natural gas, India has a demand for that. It needs to build out some of the infrastructure facilities to take more of that. But that could be an important positive to the relationship. The other important area is India is the world's largest defense goods importer, and India needs to move away from a dependence on Russia. So that would mean more cooperation with the US, and especially if it goes to new tech stuff like drones and AI, I think it will serve both countries well. I think it's beneficial if India lowers some of these tariff rates. The worry is that it's more than just India's tariff rates, whether, there's a lot of talk that the only deficit that is reasonable is zero deficit. Well, the U.S. runs a deficit for a variety of other reasons than just tariffs. And if the discussion is based on outcomes like the net deficit, rather than what tariffs India sets, I think then we could get into murky waters and a lot of uncertainty.
Okay, let's move on. And Reliance and Star India's merged entity Jio Hotstar platform is now live in India. The new OTT platform will bring together the content from both Jio Cinema as well as Disney Plus Hotstar. Shilpa is joining in with us to give us more details on this one and how will users benefit from the merger of this platform. Let's go across to Shilpa.
But the merger between Jio Cinema and Disney Hotstar is done and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, Jio Cinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros., Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now, the new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now, the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix, and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
Thanks so much for that, Shilpa. But on that note, we're going to sip into a very short break. Up next, we get you what's happening in the world of commodities. So stay tuned. Welcome back to Power Breakfast on CNBC TV 18. Let's go across to Manisha, who's waiting by to tell us what's happening in the world of commodities. What are we watching out for? Manisha, good morning.
Morning, Vinny. Thank you for that. Well, I'll start with the gold prices, where we did see 7th weekly gain, and we did see the prices hit record highs at 2942, but we are trading below 2900 right now. One, there's profit taking. Second, there also is the fact that markets are looking at further cues on prospects of peace deal between Russia and Ukraine. So that's what's weighing onto the markets. But then again, tariffs, underlying inflation, weakness in US dollar, and growing shift from paper to physical gold are all very supportive factors coming in for gold. Silver also is trading at multi-month highs, and this is after we've seen gold prices gain. Many of the metal prices were doing well as well. Copper, for one, is trading at a 3-month highs, and that in turn also supported silver prices. Crude prices, though, have come off its recent highs. U.S. could put further restrictions on Iran, but the prospects of a peace deal between Russia and Ukraine seem to have taken some momentum or profit-taking on crude oil prices as of this moment.
Okay, Manisha, thank you so much for that. But let's move on to some national update. Now, strong earthquake tremors shook Delhi NCR early this morning. According to the National Center of Seismology, tremors of a magnitude 4 were felt at around 5:30 a.m. at a depth of 5 kilometers. The strong tremors caused residents of high-rise buildings in Delhi, Noida, Greater Noida and Ghaziabad to rush out of their homes. Prime Minister Narendra Modi tweeted urging everyone to stay calm and follow safety precautions, staying alert for possible aftershocks. And more updates coming in. At least 18 people were killed and 15 injured in a stampede on Saturday night at the New Delhi railway station as passengers were waiting to board trains for the Mahakumbh. On platform number 12 and 14 of the station, the ministry announced a compensation of rupees 10 lakh each for the next of the kin of those killed in the stampede and rupees 2.5 lakhs for the ones seriously injured. Reports indicated delay in train departures and a wrong announcement about change of platforms may have created confusion that led to the stampede. Union Railway Minister Ashwini Vaishnav has ordered an inquiry and set up a 2-member high-level committee to investigate the lapses. And with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, Bazaar Morning Call.